What is a stock index? What the major stock indexes are doing will affect your trades. By watching the indexes that represent the overall market, you can find more trading opportunities and better understand why your stock is moving the way it is. An index is a list of stocks that represent a sector of the market, such as technology, financials, retail, healthcare, oil and gas, pharmaceuticals, etc. But an index can also represent the overall market, and that's what we're going to look at today. The three big indexes or indices are the Dow Jones Industrial Average, the S&P 500 Composite Index, and the Nasdaq Composite Index. The Dow Jones Industrial Average, also called the DJIA, or just the Dow, has 30 stocks, all from the New York Stock Exchange, from a variety of different sectors and industries. It is the oldest and probably best known index. The S&P 500 Composite Index is much like the Dow, except that it has 500 stocks instead of just 30. For that reason, it is probably a better indication of how the overall economy and market are doing than the Dow is. The Nasdaq Composite Index has all the stocks in the entire Nasdaq market, which is about 3,000 stocks. However, Nasdaq stocks are usually stocks of smaller companies and mainly technology stocks. So that's a less prestigious, less influential index. These two men, Charles Dow and Edward Jones, were financial publishers when they started the Wall Street Journal in the 1890s. They observed that all stocks generally follow the stocks from larger companies. So they created the Dow Jones Industrial Average, back when the U.S. had an industrial economy. All three indices show the direction the market is going, the direction that almost all stocks are going. And this is what you need to know when you trade. All stocks will follow the direction of the overall market unless there's a reason not to. That's really important, so I'm going to read that again. All stocks will follow the direction of the overall market unless there is a reason not to. Okay, let's look at that. So this is a 5-day chart of the Dow Jones Industrial Average, the Nasdaq Composite Index, and the S&P 500 Index. Okay, the Nasdaq is in blue. The Dow is in blue. The Nasdaq is in green, and the S&P 500 Index is in, what is that, pink, or kind of a purpley pink color. So anyway, you see that the stock market, all stocks tend to go up and down at about the same time for the most part. Not always, but for the most part. But even though they're going up or down at the same time, they go different distances. For example, here the Dow shot up a little further than the other two indices did. Okay, also here, the green one, the Nasdaq, it kept going up when the other two started to go down. And that shows that the smaller companies and the tech companies are doing well when the rest of the market wasn't. Okay, so this is just one example of, seeing and understanding what the market's doing. Okay, so you can see that in terms of distance and direction, most of the time, the markets move together, but not always. So this is a 5-day chart. Let's look at a 3-month chart. And once again, we see the same thing. All three indices are moving in the same direction, but not exactly the same distance. Some are a little stronger than others, going up a little bit more or a little less than the others. So for the first little while here, the Nasdaq was stronger. Then it was about the same as the other indices, and then it was stronger again. Okay, that's good to know. That's good tradable information to work with. Also, you can see that the S&P and the Dow, they almost move exactly together, hand in hand. Not always, but most of the time, because basically they're representing the same thing. Large cap, large company stocks. And here's a longer time frame. Here's 10 years. The first chart was 5 days, and then we did 3 months, and then this is 10 years. And you can see over the long haul that green, the Nasdaq, goes up more. The reason for that is because the Nasdaq has small companies that are growing faster over time, and so that's why you see it growing more. Whereas the S&P and the New York Stock Exchange stocks, they're all trading, they're huge companies already, so they don't grow as quickly. Okay, so they're all moving down together, they're all moving up together, although the distances can be, as far as how far they've moved, how strong or weak they are, can be different. That's what you need to know, because that's going to affect your trading. So once again, stocks follow the indices unless there is a reason not to. More especially, I'm going to follow the S&P 500 or the Dow Jones Industrial Average indices. I don't follow the Nasdaq as much. Okay. Now, we want to place trades in the direction that stocks are moving for the overall market, because in general, your stock will also move in the same direction. Now, sometimes there's a reason not to. You'll see a reason that it's not moving in the same direction. Well, that's great to know. That's tradable information. So the general rule is you place trades in the direction the overall market is going and the trend of your stock is also going, unless you see a reason not to. And I'll show you those reasons later once we get into the strategies videos. Okay, very, very important. So during the day when I'm trading, I am constantly watching not just the stock I'm trading or want to trade, but I'm looking at the S&P, the spiders, to see what the overall market is doing. Okay, so that's really important for you to know. And we'll get a lot more into this later, but you just need to know about that right now. Okay, so let's review. Stocks usually move in the same direction as the overall market, but not necessarily go as far in price as another stock or index. Some go further up or further down, but they generally go up or down together, okay, at the same time. Also, you want to trade in the direction that the market is moving. You're going to have better odds of a profitable trade if you do that, because the moves in the direction of the market are likely to follow the same direction as the market, and the moves are generally longer, bigger moves, so you have more chance to profit. So that's important to be aware of and to notice. So go ahead and take the quiz now. What is an index? And when you're ready, move on to the next lesson.